Hello everyone, welcome back to TechnoCharts YouTube channel, and in today's video we are going to talk about stage analysis and particularly about stage 4. So what is stage analysis? Basically a stock undergoes through 4 cycles in its life. That is the stage 1 where it is in accumulation zone, the stage 2 where it is in an uptrend, the stage 3 where it is in a sideways zone, and the stage 4 where it is in a declining phase. Now this cycle gets on repeated again and again in its life. So particularly today we are going to talk about stocks that are in stage 4. Now stage 4 generally occurs after stage 3 that we have talked, where the moving average is getting flattened up. Now we are using the 30-week moving average on the weekly time frame. If the moving average starts to flatten up, then we can call it that the stock is now approaching the stage 3 up. Yes, we can now call it as a stage 3. Here the stock is going to trade between the resistance and the support, and we are going to now wait for the breakdown of the stage 3 base, right? So what will be the breakdown? The breakdown will be whenever the support is getting broken in this scenario, then we will call it as a breakdown of a base, and which will then lead to the curving down of the moving average like this, and this will lead to a fresh rally in the downtrend, and that is known as the declining phase. We are now starting the mentorship program from next week, where we are going to talk about different stage analysis, relative strength, volatility, contraction pattern, and different concepts for swing trading, which are going to help you find multi-bagger stocks whenever this market recovers. So do join us in the coming future and get the recordings of the session from the link in description. This is how a stage analysis works, where this is the first stage one, then this will be of stage 2, and where the stock is moving or advancing up above the 30-week moving average. This will be the stage 3 or the topping phase, where as you can see here the moving average has started to flatten up and the stock is now trading between the support and resistance. Once the stage 3 base has been broken down, then it will lead to fresh rally on the downside, and that will be known as a downtrend or a declining phase or stage 4 downtrend, right? Simple. Now here we can see that the moving average or the 30-week moving average has started to move down a little bit, and now this is a clear indication of a declining phase, right? So as you can see, generally whenever a stock has broken down of a stage 3 base, it has already corrected around 30% from its 52-week high, and even after that a stock has to undergo a correction of more than around 30 to 50%. It is generally in that range, and it could be even worse than that if the market scenario is weak. So in this case, if we can see, even after the breakdown from this particular base, we can see that the IndiaMart has already corrected around 40% till now, and even now it is not going to stop until and unless we see that the 30-week MA has started to flatten up again, and then this will be called as stage 1 accumulation phase, right? So how will it look like? Once the moving average starts to flatten up like this, then that one can assume that a new rally can start on the higher side, and then we may take an entry in case of long term investing also, right? Because we never know how much fall the stock is going to have in the coming future, and that is why we generally avoid the stocks that are in stage 4. So let us talk about the recent examples that are there. For example, Star or Stride Pharma. So this stock has been battered a lot from the tops, right? So as I have mentioned, a stock generally undergoes around 20% correction minimum from the top till it breaks down the base of the 30-week moving average. So in this case, we can call this as the base of the whole structure. Then how much is the correction here? As we know, the correction is at around 25 to 30%, and then after the base was broken down, in this case, now we can see that the stock has already corrected around 57% till now. And if we look at the correction from the top, then you can calculate the stock has nearly corrected 70% from the top or from the highs in past 1 year. So this could blow up your account definitely, and there are many such stocks. For example, if we look at the chart of HEG, right? So in case of HEG, where the stock has broken this important base, if we mark the important base, I have marked it here, and then the stock has corrected around 40% in this scenario, right? the stock has already corrected 40%. So this is a sell on rise opportunity in these stocks, because these stocks are in a downtrend. So don't get carried away from Twitter handles or Telegram handles which are suggesting you to buy these stocks as a value buy, because these are not value buy, these are value sell. Understood? Now if we look at the example, recent examples of Dabur, right? So Dabur, I was already tracking Dabur from around 560 rupees, and we had already given a sell call with in our mentorship group, where we talk about stage analysis, where we talk about the relative strength of a stock. So if you are interested in understanding these things, then the link is in the description, so that you can message me on WhatsApp and I will share you with the details, right? So in case of Dabur, we can see here how the after the base was broken down here, how the stock has retested the area. Let us mark it live here. One second. Right, let us mark it live here. How the stock has broken down here, retested, and beautifully again rejected this area. So similarly, India Bull Housing Finance. Now these are the stocks that are getting pumped up everywhere, but you all know these stocks do not have great fundamentals, and hence they are falling. So example, if you look at an example right now of pie industry, right? So pie industry has already broken down from an important base here and already retested this area. So we will call this as an important base here. Now okay, we'll call this sorry, we'll not call this, yeah, we'll call this as an important base, because this was the recent low where from the stock has moved up. So in this case, there is a rejection, and the stock is at now at support. So don't think this as a value buy and that the stock is going to move up. Until and unless the stocks move up above the 30-week moving average, these are not value buys, these are value sell. Because if a stock wants to be, if a stock wants to move up, right, if a stock wants to move up, then definitely some or the other point it will start to trade above the moving average, and that is the point where you should be buying these stocks. So similarly, apart from pie industry, example is Naukri, right? Even though the stock is at a very cheaper valuation, the stock has been still hammered like anything from the top. So Naukri is an example where you should be avoiding any kind of buys right now, even though you think that the fundamentals are really strong. Divis Lab is one more example that you should be avoiding right now, because the stock has been in taking a resistance. You can clearly see that the 30 MA or the 30 week moving average is a resistance in this particular script, and every time it is hitting it and it is breaking down. So don't buy these stocks just for 5% return, because in the end these are going to get hammered whenever the markets are weak, right? So example, one more example is of PALE, Pyramidal Enterprise. So definitely these stocks do have great fundamentals. Even great stocks with great fundamentals have to undergo through these four cycle, because no stock can directly reach to the moon. It has to undergo through a cycle to reach at a particular level, right? So please think twice before buying a particular script. And because as soon as a stock enters into stage 4, these stocks are going to get hammered like anything, and there are many such examples that I have shared. And yeah, so if you like the video, do share it with your friends, like and subscribe to the channel. Thank you.